analysts, the press, and Maib colleagues. I thank you for joining us today. We are pleased to present you the financial results for the fourth quarter and full year 2022. These results are based on standalone, unaudited financial statements for Maib and do not include the results of two subsidiaries, which combined represent under 2% of total assets of Maib. The forward-looking statements in this presentation are based on our best estimates and are not intended to be taken as a promise of future performance. On the call today, we have Georgy Shagidze, the CEO, and Makar Stoyanov, the CFO of Maib. And my name is Evgeny Risovich. I work for Investor Relations here. So, Georgy, I will ask you to start with a brief overview of Maib's performance, please.
Hi, hello everyone, and thanks for joining to our quarter four call. So let me start with the executive summary. The macroeconomic highlights, GDP growth was not encouraging in quarter 3 2022. This is the latest number available, which was minus around 10%. However, the big part of this was caused due to the agro harvest and drought that we had in the country in agro. And if you think about the average forecast for 2023 and 2024 of GDP, average of the most reputable agencies working in Moldova, these are plus 1.3% and 4.5% respectively. In terms of the inflation, December inflation was 30%. The inflation has already reached the peak, and the inflation that was published last week, it was already around 25%, and then the central bank has started to decrease the base rate, so that's very encouraging. From the perspective of our strategy, despite the not easy macro environment, we continued to invest and progress across all our strategic initiatives, reaching about 430,000 mobile banking users, 1 million plus cards, and around 55% in online deposit share. Continued transforming our branch network in the new format, new customer relationship model with which we are going to finish somewhere this year. In terms of the financial performance, despite the not easy macro, our return on equity for the full year is around 19%, and return on equity for the quarter four was around 18.3%. On the back of asset growth of around 16 up to 16%. We will see all this detail during the presentations. Evgeny, please.
Thank you, Georgy. I will give a brief overview on the economy here. The economy this year has declined. We do not yet have the final figures from the National Bureau of Statistics, but we have the data from the forecasters, and forecasts range between 0 and -5% for the year from such forecasters as international financial institutions and academic institutions. Quarter 3 economy has declined by 10%. This has been due to severe drought and the weakness in agriculture sales. So we believe such decline was temporary. Again, going back to the forecasts by major forecasters, there is a recovery expected. Most forecasters predict a recovery between 1 and 2% for 2023. Talking about the inflation, As you know, Moldovan economy has been impacted severely by the war in Ukraine, which translated quite substantially in increase in inflation, which has also been impacted by energy price increase of some 400% of the price of gas for Moldova. As a result, we've seen an average inflation of around 28% for 2022. The National Bank of Moldova has responded, tightening interest rates, which have reached 21.5% in August, and then in December it has started easing the monetary policy with in base rate down to 20%, and then in February, subsequent to year end, we've seen a decline of 3 percentage points to 17%. The National Bank expects inflation in 2023 to ease to around 10% annual average. There has also been an easing in mandatory reserves for both the national currency and the hard currency from National Bank in the first 3 months of the year, with further decisions expected in March. Going forward, as far as FX rate, the key reference currency for Moldova euro has Moldovan lei has been stable against the euro, and only seen a 2% change and has seen a minimal change against the currency. As far as the FX reserves of the National Bank, we've seen a very strong reversal from Q1 when reserves have declined by $500 million. We've seen a reversal in Q3 and Q4, where reserves are up to $4.5 billion from 3.9 the year before. This has been due to very strong, very tight monetary policy, as well as strong inflows of foreign aid and stable inflows of remittances from abroad. In terms of the banking system, some short overview here. Banking system has grown assets by about 11%. Maib was up by nearly 16%, gaining market shares, Georgi mentioned. In terms of loans, growth of the banking sector was 9.3%. Again, Maib here outpacing the banking system at 16.5%. Deposit growth, again, we've seen a decline in Q1 and Q2, and then a very strong reversal. For the year, the banking system added 5% to its deposit base. Maib again outpacing the banking system with 9.6% gain for the year. Now, I will just give a brief overview of the main events that we've seen during the year. 2022 was the year when new contracts with Gazprom was fully enforced, with reference price tied to European market prices, and we've seen a huge increase in pricing on gas and electricity, contributing to inflation, as well as Russia cutting supplies by 30% in October. As a result, Moldova used this crisis and turned it into an opportunity to achieve an independence of its energy system by importing gas from Romania and the EU. Once again, I will reiterate that most forecasters predict a recovery in 2023, as well as the easing monetary policy by the National Bank of Moldova following the decline in the inflation. In terms of political developments, we've seen Moldova receive EU candidacy. And in February, just recently, the EU Commission has published its assessment of the state of harmonization of Moldovan legislation. European Union will hold a summit meeting of member states, head of state in Moldova in June. These are, and of course as well, we need to mention that the Prime Minister nominee has just been announced, and the new proposed cabinet has just been announced yesterday. Confirmation is expected later this week. I will then pass the microphone back to Georgi to speak about the overview of the strategy and bank's performance in 2022.
Thanks, Evgeny. Just to go through this slide, Maib at a glance, and just reiterate who we are. We are by far the largest bank in the country across all loans, deposits, distribution network, or brand perception, and most of other key indicators. In terms of dollar value, our total assets is about $2.3 billion, and our shareholder equity is about $345 million. You can see the distribution network numbers on the left-hand side of the slide. From the perspective of the shareholder structure, 41% of our shares belong to Maib Partners, which is the consortium of EBRD, Horizon Capital, and Invalda. We have 14 individuals with more consolidated positions, but they don't act in concert. And we have around 3,000 shareholders. If we go to the next slide, that basically gives you an overview of the strategy of Maib and where we are focusing and where we are progressing. The four strategic initiatives that we have illustrated here are: number one, this is the new level of customer experience, and maybe I can even say that to put the customer at the center of everything we do in the bank. This requires lots of transformation from the perspective of the culture, from the perspective of the routines, the processes, to ensure that we really are engaged with the customers. And in this regard, we started many sub projects, and the results are that our NPS continues to grow and our market share obviously continues to grow. Number two, what we are doing from the strategic initiatives is the focus on digital and ensuring that we become the orchestrator of the financial digital ecosystems in the country. Number four, we continue listing the endeavors to list our shares on the international stock exchange. And then number four, which is a little bit in the medium term, is to approach and serve Moldovans living outside of Moldova with digital channels, the digital product and services. And we will be doing it, or we are doing it, on the back of agile transformation, where we already completed the first phase of this transformation, and the new ESG program, which we are setting up now. If we go to the next page, some more visuals about our endeavors across all the pillars that I mentioned. I think I can once again reiterate that we've been named as the best bank in the country by most of the reputable agencies that work in the country. Quota 4, we were awarded with the award by the banker. In the middle, you see our conference that we did for our corporate customers in relation to their potential access to Romanian capital market, which happened in December. Next slide. summarizes the numbers per our digital initiatives. You can see that, first of all, on the top left-hand side, the number of mobile banking users continue to grow around 50% each reporting period here, achieving 430,000 users for the end of quarter 4 2022, with the 54% growth. On online payments continue to grow, reaching 411, and this is happening with very encouraging penetration of mobile banking share in our main retail products, such as 23% of our loans are disbursed online, and 55% of our deposits are taken online. On top of the traditional online banking products, we have launched our ecosystems in automobiles and in housing. You can see the numbers or the unique visitors growing quite impressively, admittedly from the lower base, but we continue to serve our customers in any we continue being next to our customers in digital space to fulfill their needs related to cars, the automobiles, and so on. On this slide, we are also giving our MAU numbers, which you can see 72 and 34% respectively. And if we think about the quarter 4, we continue to introduce new products in digital form, and we launched a digital-only card from our mobile application. The new projects, these are the projects after we launched Apple Pay, Google Pay, Tap to Phone, and utility payment with the new wallet system in mobile banking. And this year there will be some more products and projects in mobile banking. Please move on. Makar, if you can start with the financial performance.
Yes, I do. Hi everyone, thank you, Georgi. So let me now present and play back the financial part of our presentation and the effect of the strategy which Georgi just presented on our financials. I'll focus on both on Q4 and also partially cover the full year as well in 2022. If we look back, we have a leap in the performance and efficiency on the overall level of the bank. So on the net profits, we see that on an annual basis, over 56% increase in the net profits to over 1.1 billion lei. Also, the quarterly results are quite promising, where we have close to 300 million profits. And that shows also in the return on equity, significant improvement both versus last year on year and quarter base. We see 18.8 on the year overall 2022 and 18.3 for the quarter 4. Of course, the biggest driver behind this, and we'll deep dive a bit later, in net interest margins. This spike we see in Q4 is 6.5, and also on the yearly basis is close to 6%, 5.9 net interest margins. All this we did in the context of managing tightly our operational expense and our cost to income ratio, and as a result, it's 45.5% on annual basis and 44% on the quarterly. And that in the context of highly well-capitalized bank, over 22%, and a well-managed liquidity over 43%, and we'll get deeper in the second. Now let's look deeper on the next slides on the key drivers behind. And of course, we will start with the loans and deposits, and then go to the net interest margins and so on. We have a strong growth across all the business lines on the loan side, both on the corporate, business banking, which covers SME and macro clients, and retail. Especially strong performance we see in Q4 in legal entities, driven by corporates and stable increased business banking. On the retail side, we see a stable business in the sense of the volumes, very small decrease like 0.5, 0.6%, but that's in the context where overall market increased even more. And as a result, we'll see that our market share on the retail side of credits has increased in Q4. And one of the drivers or the key drivers of the decrease of the growth of the retail side is responsible lending, which came in force in Q3 2022, and of course the impact seen the last month as well. On the deposit sides, we have a strong, good growth, especially in Q4 and in retail, you see plus 15% quarter on quarter. Also driven by the fact that, as mentioned a bit earlier, the inflation start decreasing and the economic agents, including population, of course, start fixing or increasing the level of deposits on the higher interest rate. So we see important stable funding increase in Q4, but also year on year, good performance, 9.7 year on year, 9.6 quarter on quarter. Now, what impact does it have on the next slide on net interest margins? And what we see, the net interest margins is expanded across both in Q4 and on a yearly basis, driven by two factors. On the volume side, because we have increased our loans, discussed earlier, by over 15%. We increased also the level of reserves in the National Bank increased significantly. But also on the yield side, we see important upside or the impact from increase of the yields on the loans and on the deposits, on the loans and on the reserves from National Bank. So both of these contributed to the increase in the revenues from the interest revenues. While on the cost side, the cost of funds, it was decreasing much slower and also well managed in sense of the increase in the deposits rates was lower than inflation and so on. As a result, you see that we have increase in interest earning assets on the quarter basis, but also especially on the yearly basis, and in the increase in net interest margins of 6.5% the last quarter. Now, if we move to the non-interest income on the next slide, we see some decrease in the last quarter, but it's driven by the fact that in Q3 we had some dividends from some of our equity investments, which of course was not anymore at one-time event in Q4. If we look on the FX side, it's significantly and steadily increased quarter on quarter for 2022 and also in the Q4 of the last year. 131 million in Q3, 140 million in the Q4, driven by the increase on the volume of transactions and the spreads, margins on the retail side of the business. If you look on the fees and commissions, in absolute value of the income, it's increased because of the scale, but we also at the same time continued investment in our infrastructure in acquiring the issuing business to ensure that we have very strong basics to continuously grow in such a developing economy with the payments and so on, but cards and you name it. At the same time, to be able to capture even higher margins in the next years or next quarters. So that's why if you look here on the numbers, it's slight decrease 110 or 103 versus 110 on fees and commissions, but in absolute value is still increasing. Good. All in all, if you go to the next slide, we have a strong performance improvement in the cost to income ratio, both on the quarterly basis and on yearly basis. For instance, on yearly basis, we have more than 9 percentage points improvement in cost to income ratio to 45.5. On the quarterly basis, it's 44. Here, I want to highlight that Q4 usually is quite seasonal, as that's where we usually see a bit higher increase in the cost as they're closing to the year end, but still we managed very well in sense of keeping it under control. If you look on the operating expenses side or OPEX, increase is driven by higher inflation. Want to highlight that if you look on the FTE side on our labor force, it's we have the increase on the FTEs only on the roles like IT and kind of where we really invest and we focus in our strategy. But overall, we managed and we keep FTE under control in other areas. At the same time, we adjusted as in the overall market on a yearly basis the remuneration of FTEs. But all in all, the impact is or the increase in the OPEX is very small on the FTE side. On the other operating expense, where you see the most increase on quarterly basis, here we ensure that we focus on refreshing our strategy, which we just presented, and in Q4, and continuing investment and expanding our key strategy, like key initiatives, and that's the main driver. So it's investment in the future. If we take those investment part, of course, the other operation expense will be significantly lower or similar to the Q3 of the last year. Now, of course, it all comes with managing the risks, or let's say credit risk, where we focus here. What's important to highlight, our coverage ratio is close to 200%, and it's a cash coverage, which gives us the stability to be covered in case of any adverse evolution, which we don't expect anymore, but it's still, we're very well covered. We also reviewed critically our forward-looking parameters in our forward-looking ECL model, and ensured what you see here, cost of risk on 12 months, 1.41%, just to ensure that we build enough muscles in case of adverse effects come from the crisis which we are being facing last month, like energy crisis, the war in the neighboring country, or the higher inflation. So, and that all with a stable, slightly deteriorating 0-something percentage points NPL. So overall, is 2.5 stable quarter-on-quarter ratio. Now, and as a result of our revenues, managing operation expenses, and credit risk, if we go to the next slide, we see our capital position strong and improving 22.2%. Well above the minimum required, which gives stability to the bank. Also, if you look on the Tier 1 capital ratio, 20.2%, again, significantly above, even higher than the minimum required of 60%. Well-capitalized bank with a strong capital position, and where we have a kind of the good, stable funding. And last but not least, let's look on the last slide in this presentation, return on equity and assets. Return on equity and assets, well, upward trend, quarter-on-quarter, year-on-year. So if you look on the quarter, 18.3, as I mentioned, we have some decrease compared to Q3. It's just seasonal factor. It's usually if you compare it to the Q4 of the last year, improvement. And if you compare to 12 months, 2022 versus 21, we have increased more than 10 percentage points, from 18 or close to 14% to 18.8%. And that's driven also, that's also it's seen in the return on assets, where we have 2.8% on quarterly basis and yearly as well, improvement versus last quarter, last year, the same quarter last year, or the year-on-year. And the slight decrease or decrease versus Q3 is driven by the seasonal factors. If you look on the pre-provision ROE, it's even higher would be, and that's just to reflect our strategy that we have just discussed a bit earlier in credit risk management, to ensure that we build up enough capital, enough buffer, to be able to withstand any potential front end. That's it on financial side. Thank you.
Thank you. Maybe again we switch to questions and.
Sorry, yes, Georgi. Sorry, I was on mute. But this concludes our presentation. We will now open for questions. We have a couple of questions on email. I don't see anything in the chat, so please put your questions in the chat, and we'll answer them. So if that's okay, I will put two questions that we have on email. One is the question on dividends. During the AGM in June, the National Bank did not recommend paying the dividend. The bank said that we will come back to it. Can you give an update, please?
Yes, we will continue dividend discussions. There is no update at this stage. Usually the updates are available somewhere in March and April, and then we will disclose as soon as we have it. We will continue this discussion.
Okay. Second question is, given the inflation and the economic slowdown, can you comment on the credit quality trends, the NPLs, the liquidity coverage that you've seen during the Q4, please?
Yeah, so this is a very good question. We proactively, as Makar said, we created provisions, and for now we see that the credit quality is basically better than we expected. And you saw the numbers. Our coverage ratio in cash is around 200% at this stage, and we are seeing that the NPLs are being ticked. So, I mean, we still need to see 3-6 months, but we are going there very confidently with very strong coverage ratios in cash. And again, the first reaction on the numbers, they are better than we expected. In relation to liquidity, we continue to operate on very strong liquidity and capital buffers. Liquidity we have from, if you see, when loan to deposits is around 70%, and we have invested around 4 billion in T-bills. So we continue to operate on very strong numbers in capital, in liquidity, and provisions.
Thank you, Georgi. Questions from chat now. Can you provide some outlook for net interest income going forward?
Net interest income from Q4 level will decrease. It is not sustainable. It will decrease in parallel of the decrease of the base rate. However, if you think about the net interest income evolution, net interest income increased because of the base rate, as well as because of the fact that we improved, we reshuffled our portfolio, and currently retail and SME shares in the total portfolio, they are much higher. So net interest income we expect in the medium term to decrease. Nevertheless, this decrease will not be to the level where it started to increase because of this portfolio reshuffling that I mentioned.
Thank you, Georgi. There's another question asking for the details of the IPO.
Yeah, I mean, we haven't changed any plans in relation to IPO, and then we will continue updating markets as the new information is available, but there is no changes in the plans of IPO.
Thank you. Another question from chat. What is the share of floating rate loans and term deposits?
The loans would be around 50%. I mean, most of the long-term loans would be floating, and Makar, you can help me, but that could be around 50%. In terms of the deposits, most of the deposits are being repriced in 1 year. So even when we have the long-term contract for the deposit, the repricing will happen in 1 year. So that we moved to this strategy around 14-15 months ago, and that helps us to hedge our NIM. And when there is an increase, we increase the net interest margin, but then now we are decreasing the rates, but there will be proportional decreasing in both assets and in liabilities.
Thank you. And last question we have, unless somebody poses another question. Given the inflation of 30% in Moldova, how do you see cost outlook going forward, especially on the staff side?
And it's good news is that inflation is already around 25%. And then, as I said, NBM did decrease base rate 7th of February, so that there was a decrease by 3 percentage points. And also market, when you think about the T-bills interest rate, expects most likely further decrease. Maybe it could be less magnitude next time, but then market judging from T-bills rate may expect further decrease. So that's good news. Last year, we did increase the salaries within especially implementing new grading system and ensuring that we act as fair as possible. And this year, when it's necessary, we will continue doing so. Overall, we look it in a way that our costs will grow and will continue growing related to inflation, as well as related to investment that we need to upgrade our infrastructure and so on. However, very important is that we manage the cost to income, and our cost will always grow less than our income, and we ensure that right direction of the cost to income. While I won't be able to give you the specific target for this year, because you may understand the reason why, the longer term guidance is that we continue decreasing cost to income and managing it proactively.
Thank you, Georgi. Thank you, Makar. Thanks to our audience. This concludes our presentation and question and answer session. Thanks. Goodbye.
Thank you. Bye-bye.
Thank you.